We are joined in now by Rajshekhar from Bengaluru. What is your question?
Madam, I have taken in a flat in Bangalore, 37 lakhs something.
Okay.
He has putting a 3.24 lakhs in taxes. Which tax I don't know, madam, this one. The builder has made two agreements. One is sale agreement, one is construction agreement.
Okay.
Which portion I have to pay, madam, tax?
Right. That is the practice that is followed in some parts of the country, isn't it, Vinay?
Yes, especially in Karnataka, the way the builders go about it is that they enter into an agreement which turns them into your contractor. So essentially they sign two agreements with the flat buyer. One will be to say that we will procure labor and materials, etc., and construct the flat for you. Now this is clearly something which is amenable to VAT as well as to service tax. So this is the agreement where you will end up paying both. The second agreement that the builder signs with you is to sell you an undivided share in the land in proportion to your flat vis-a-vis the total area available. Now that is a transfer of a share in the land to you. So therefore neither VAT nor service tax is payable on that particular agreement. So this is the position as far as Karnataka is concerned.
Also, he said that he has been asked to pay 3.24 lakh rupees as tax on a 37 lakh rupee flat, but he's not very clear as to what tax this is. Is it possible for you to tell him what tax this probably could be?
Service tax would be 4.5%, and I think in Karnataka your VAT rate is 5%. So it should be a 9.5% of your total value of that particular agreement, where you are saying that he will construct for you.
So just to reiterate, Vinay, very quickly, could you run us through all the taxes that buyers need to pay when they buy a home? And this is very, very essential. Remember, when you plan to buy a house, it is not just the cost of the house that you need to be prepared for. You need to be prepared to pay all these taxes which are not covered by a home loan. Vinay, what are these taxes?
Well, I'll start with stamp duty because that's a significant proportion. In certain states, even the registration charge becomes a significant proportion because it would be of, say, flat 1%, like in Karnataka. So that's the second thing. You also have to pay service tax as of now, and you also have to pay VAT, though VAT may not be payable in every state. So you will have to check, like for example, Noida, etc., does not levy VAT. So you'll have to check.
And of course TDS.
And of course the last thing is that you have to deduct TDS and pay it to the government. Now this is a little dangerous situation because if you are a little lax, you will find that you are being asked to pay interest, you are being asked to pay late fees. So my advice to you would be take professional help and make sure that you do not default on this deduction of TDS and the deposit with the government.
Right. And TDS, remember, has to be paid within the 7th of the month, which means even if you are buying property, say you execute the sale deed on the 30th of this month, you are technically getting only 7 days or 8 days. If it's a month with 31 days, then you're getting around 8 days to pay that TDS, which amounts to 1%. So net, you're looking at something like 10% of the cost of the flat, which you pay as taxes?
Yes.
So that's what you need to be prepared for. Almost 10% of the cost of the flat, which will go in taxes, that comes out of your pocket. Plus, you have to be prepared to shell out 20% because no bank is going to give you a loan that is more than 80% of the cost of the flat. So be prepared with at least 30% of the cost of the flat and then go out looking for a flat in the market.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at Magic Bricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magic Bricks Now.